Salam everybody, this is Investor Sheikh back at it again with another video. And today's halal stock pick of the week is Corning Inc., ticker symbol GLW. Stock price is at $40.49. Some key stats are it has a $34.5 billion market cap. It pays an annual dividend of 91 cents per share. The 52-week low is 29.63 and the high is 46.56. PE ratio is 40.55 and the earnings per share is $1.03. And Corning is one of the world's leading innovators in materials science with a 169-year track record of life-changing inventions. Corning applies its unparalleled expertise in glass science, ceramic science, and optical physics, along with its deep manufacturing and engineering capabilities to develop category-defining products that transform industries and enhance people's lives. Corning succeeds through sustained investment in RD&E, a unique combination of material and process innovation, and deep trust-based relationships with customers who are global leaders in their industries. Corning's capabilities are versatile and synergistic, which allows the company to evolve to meet changing market needs, while also helping our customers capture new opportunities in dynamic industries. Today, Corning's markets include optical communications, mobile consumer electronics, display, automotive, and life sciences. So, Corning is the company that makes Gorilla Glass, which is a very powerful glass. And their glass is so strong it's used in many things. And one of the prominent devices that uses Corning glass is your smartphone. Whether it's an iPhone or a Samsung, both companies use Gorilla Glass, which is why, smartphone glasses are pretty strong these days. They're scratch resistant. And unless you drop your phone hard, it's gonna crack, but it's designed so that it doesn't wear and tear easily. So let's look at the description on Robinhood, just to get a better understanding. Corning Inc. develops and manufactures specialty glass and ceramics. It provides glass for notebook computers, flat panel desktop monitors, display televisions, and other information display applications, carrier network and enterprise network products for the telecommunications industry, ceramic substrates for gasoline and diesel engines in automotive and heavy-duty vehicle markets, laboratory products for the scientific community, and specialized polymer products for biotechnology applications, advanced optical materials for the semiconductor industry and the scientific community, and other technologies. It operates through the following business segments: display technologies, optical communications, environmental technologies, specialty materials, and life sciences. And later they just expound on those segments. So as you see, Corning does way more. As a material science company, they are responsible for creating materials that can be used in many applications, whether it's for consumer goods like computers, smartphones, TVs, but also laboratory products for the scientific community and biotechnology applications. So a lot of the stuff that they're making is going toward many fields, which is very versatile in a company, and that's something that's very important to look out for, as opposed to a company that has just one service that fits to a niche audience. They provide services for a wide variety of fields, which is very important. So let's take a deep look into their financials. So let's start with the stock price. So it is at $40.49, which is closer to the 52-week high. So let's see how this stock has performed in the past 5 years. So over the past 5 years, you would have had a 78% gain on your investment if you held on to it. Now, of course, the crash of 2020 has allowed this stock to reach all-time lows. It was as low as $17 a share, and now it has more than doubled since then. So that's something to take a look at. And in 1 year, it was 21% growth. Year to date is 12%. 6 months, it's 4.8%. And it's a little bit down in the past month. So you are getting it. You are getting the stock at a good value for the time being. So looking at the financials here, the market cap is 34.58 billion. So when you look at a company like Corning with their reputation as a material science company, they have a well-established reputation as they've been around for almost 200 years. And the materials in which they are producing are very useful to many companies. Example being electronics companies, because everyone's buying phones, TVs, computers that has a display, a screen, and they create the glass. And the crazy thing is, that's not all they do. They do so much more than just make displays. So much more. And this is also a dividend-paying stock, so it does pay 96 cents a year. So I don't know why it's different on Zoya, but which this shows that it has a 2.38% yield, which is pretty good for a stock. And especially with these dividend companies, over time the dividend will grow. They'll raise the dividend, and eventually the stock price will go up. And that's the benefits with holding on to dividend-paying companies that have a proven track record and a strong reputation. And I believe Corning is an example of that. So looking at the earnings, they have beat earnings quarter after quarter recently. And okay, and let's take a look at the details here. So going back to the earnings report, as you see here, their revenue is really good. Although you do not see year after year growth, you do see in 2020 the revenue has decreased from 2019, but ever so slightly. And then the earnings, they've been pretty volatile. Negative earnings in 2017, then they'll go up in 2018, 19, and 20 was slightly less than the previous years. And in the quarter, you do see quarter after quarter growth in 2021. So that's good. Now let's take a look at what the analysts are saying. So in general, the analysts are saying that it is between a buy and a strong buy, but closer to a buy, with price targets as low as $41 and as high as $54, with an average of $48. So meaning that based on what the analysts are saying, you could very well get the stock at a good price right now. But I'm not saying that you should buy it. This is what the analysts are saying, but frankly, I'm not a big fan of analysts because they can make any prediction on a stock. Some will be bullish, some are bearish. But the thing is, we don't know how a stock's going to perform. And the problem is, if you take these analysts' predictions to heart, it could negatively affect your portfolio, especially if they're saying sell so-and-so. So that's one thing to watch out for when it comes to analysts, because everyone has a different opinion on a stock. If everyone has the same opinion on how a stock is going to perform, it's going to be a dull world. I like when people have differing viewpoints, even on stocks that I'm bullish on. Like, I'm very bullish on Tesla, but there are people who are very bearish on Tesla. and expect the company to flop. And me holding the stock is just trying to prove those analysts wrong because, frankly, it's a high conviction stock. So it's up to you as the individual to look into a company and determine whether or not it is a buy, regardless of what analysts may say, because they have different opinions. So in this case, yes, the analysts are saying that analysts are generally bullish on this company. Although if you see in this recommendation trends here, more analysts are saying to hold for the month of August. I guess probably due to the price dropping from its all-time highs. But as with any other dividend-paying stock, this could be one to buy and hold for long term if you're looking for dividend growth. And this is a well-established company. So let's have a deeper look at the financials here. Okay, so looking at the income statement, the company is turning in a profit. And this is true for many companies that have been around for years. They've already succeeded in their company and they are generating profits on a continuous basis. Now, this is something you don't really see in many growth stocks, but for more established companies like Corning, you do tend to see them being profitable. And look at the balance sheet. Their current assets are $30 billion and their liabilities are $17 billion. So that's good. Their assets are greater than their liabilities. Got $7.6 billion in long-term debt and $146 million in current debt, which is relatively small compared to their market cap. So this would explain why they are halal in terms of the financial screen, as the debt to market cap ratio is well below the 5% threshold. All you gotta do is divide 146 million divided by 34.5 billion to get the debt to market cap ratio. I'm sorry, it's at 30% threshold, not 5%. That's interest. So all in all, Corning Inc., the manufacturer of Gorilla Glass, ticker symbol GLW, this is a stock that you could benefit from as a buy and hold. I would not do a swing trade on this company because so many companies depend on Corning Inc. to supply the materials for their products for many applications, whether it's consumers, science, biotechnology, etc., etc. I consider this to be an essential company, and as Investor Shake always says, anything essential is a stock worth owning. Now, as always, I'm not a financial advisor, so please don't buy this stock simply because I'm talking about it. I highly suggest you do your research on this company, and if you're convinced with what they do and what they're capable of, consider adding this to your watch list. This is Investor Shake, checking out.